This sentiment on Europe's key energy markets is turning from bullish to bearish this week, but are the bears really willing to pull through, or are we just in another extended sideways trend? Well, let's find out. Hello, my name is Marcello Colax. I am the managing director at Clever Markets, and I'll walk you through the charts for the week starting 4th of August 2025. But as always, before we get started, please be reminded that everything you see here, of course, is just my personal humble opinions and not an invitation to trading, of course. Okay, so this is what we are starting out with this week. We see that the bulls have run their course. We are now from the hourly charts all switching from previously bullish to now bearish. So why that is and how that came to be, we'll have a look in a second. We also acknowledged that the preceding uptrend on most gas and power markets in Europe have now turned from bullish to neutral, and this neutrality in my eyes is probably very likely to be continued for the next couple of weeks, and we're working with really clear levels that will tell us when the market will resume its bullishness or bearishness. So this is the sentiment poll that we are working with right now. So you can see just last week we had a majority of bullish traders, and that was pretty much in line with what the market actually did. But when the market put in a peak at the end of last week, and we did get a big red candle on most European gas and power markets, that turned the market sentiment probably from mostly bullish to mostly bearish. Now, here's the thing. It's truly important to understand that the sentiment poll that we publish every Monday is just a snapshot of the current market sentiment and has no predictive value. Although the question that we ask our nearly 200 participants every week is, where do you think the market is going to go for the week ahead? It is just everyone's assessment of the market at that point in time with all the information available at that point in time. So now that the week is starting, who knows what's going to happen? Now here's the thing, I'm already going a little bit ahead. The European energy markets, they are mostly starting to form a sideways range. So in these sideways ranges, the Clever Markets sentiment poll starts to become quite useful, because now the market obviously is working with a clear ceiling and a clear support area. So once we are approaching this resistance or this support, that would also usually then turn the market sentiment from previously bearish to bullish, or from bullish to bearish. So this hopefully will help us to pinpoint the turning points with greater clarity. If at some point we would be getting at the range, we're at the upper end of the range, let's say, and we would still continue getting a bullish sentiment, then the market is more likely to break higher. If at the lower end of the range we continue getting a bearish sentiment, then the market is more likely to continue lower eventually. But this is all just theory, and we need to see how it actually shakes out in practice. So once again, we see that the European energy markets, they are sideways, as we can see on the TTF front month, the NBP front month, TTF and NBP front season. We do have EUA's German power, US net gas, so Henry Hub and Brent, and you can see all of them are just going sideways, sideways, sideways. So I do not expect the market to make any big moves this week. We'll probably just continue lower within this range. Now let's have a look at the markets one by one. So you see that on the TTF front month weekly chart, we have turned neutral, or we have been neutral for a little bit, because you can see the market really isn't going anywhere at all. We had this gradual uptrend from April 2025 to June 2025, and then we had this big old decline in late June, and since then for 1, 2, 3, 4, 5 weeks nothing has really happened. And this here is this wide range that we are talking about on the daily chart. Ultimately, let's have a look at the different tools that we are looking at to just confirm our thoughts. So we see that nothing special happening on volume really. We did get a higher volume on the uplex. That's usually encouraging for the bulls, but no luck. Everything still ended up sideways. We see that the momentum tools are not really giving us new signals right now. Yes, we are below the zero line, which is usually firmly bearish, but we also see that the momentum isn't really going either way. Let's have a look at the stochastic. Is there any sort of bullish signal or bearish signal? Well, right now there isn't really anything at all. Yes, the stochastic is pointing lower still. We're making lower peaks and we're making lower troughs overall, but right now the market really isn't giving us any good signals. So for example, we would only get a bearish signal when we move from overbought territory into neutral territory, and we would get a bullish signal if we move from oversold territory into neutral territory. None of this is happening. We're just floating, so no signal here either. What are the moving average showing us in terms of like trend? Well, it's still gradually moving lower, but you can see that the 8 and 12 exponential moving averages, they're just hugging each other very, very closely. So it's nothing like it is here with a healthy distance, right? And the downside still remains stable overall, but I do not think that there's much gains to be had in the next couple of days at least, or weeks for that matter. So let's have a look at the TTF front month daily chart. You can see we pointed out this rectangle here with support at, well, near 32 and resistance near 36. So we're quite okay with this range, although these two troughs don't fully align. You can see if we would put this trough here near 32.64, we would get a little bit of an overlap here. So we are usually safer if we put the range a little bit further away to capture most of the move, or the most extreme points of the move, if they still make sense. Because can you imagine a situation where we put the support level here and we say the bearish trigger level is then below this earlier point, only to be stopped out a little bit below that. So that's why if we have like a thick area of support or resistance, and I would consider this a thick layer, we like to put it more on the outer end to make sure that we are not being lured into a trend that is not really maintainable, and that we just get in on a fake out essentially. So that's why we put them a little bit further away. The same logic you could also apply for the rectangle resistance. So you could put this a bit further away, 36.32 if you are so inclined. Last week it was a little bit spotty, a little bit gappy. We had small candle bodies, long wicks. The market wasn't really convinced. It was wondering, is this a valid move? Is this a valid move? Is this a valid move? With every single day that passed, only for last Friday to be seeing such a big red candle. And you can see this is called like a bearish engulfing, and bearish engulfing candles are usually reversing an uptrend or an up leg into a down leg. So what are some of the considerations we need to make when we start looking or start identifying one of these reversal candle patterns? So the first thing we want to see is it needs to happen at an important resistance level. Cool, that kinda is happening. And then we need a preceding uptrend. That's super important as well. That's also happening. Then the bearish engulfing is usually a smaller, greener bodied candle that is then fully engulfed, or the body is fully engulfed by a bigger red candle. Then we put the validation level at the lowest end of the pattern and the invalidation level at the upper end. So if we get a daily close below that, or I mean, it's a pretty tight range, right? 32 and 36, tight range. This kind of move can happen in one day. So better do it on the hourly chart. So below this, we would get a validation, and above it, we would then get an invalidation of this pattern. All of this is also described in our technical analysis playbook that I've been writing. We see all of this play out quite nicely, right? You can see here we are saying, if the candle bodies are getting smaller and the wicks are getting longer, that means we are likely reaching a peak, which is exactly what happened here, right? So the candle bodies were getting smaller, the wicks were getting longer at a near an important resistance level. So looking pretty bearish to me. Here's some universal guidelines that we're working with, right? I feel like in this case, it's like a two candle pattern as well. We always need a preceding trend that can be reversed, and then we mark out the peaks and the troughs as a validation or invalidation point. Here are some other factors that we want to consider to identify how valid this pattern is. So first things first, is it happen at an important support level or resistance level, this candle pattern? Well, in our case, yeah, it is happening at an important resistance level. Then we have the pattern itself. And did we get any sort of like bullish oscillator signal, or in our case now a bearish oscillator signal? Not quite, but we are topping out seemingly where we topped out previously. So it's not a firm bearish signal as you would get one like here, moving into overbought territory and then below it. But this one here obviously shows that the market is unwilling to move any higher with the slow stochastic. Then did this pattern happen on high volume? I don't know. Let's have a quick look. Definitely okay volume. I would say it's like average volume, nothing special here. Please also do keep in mind it's the start of a new month, so volume is a little bit all over the place. So of course at the end of the month we would see like the lowest volume, and then maybe some people trying to close out the last bit, and then at the start of the month the volume picks up again. So if we are just at the contract rollover, volume is a little bit less important. All right, what are some other factors? That's about it. And then we need of course the candle confirmation, which would come below here, below 33.74. Not quite happening yet. So as I said earlier, usually I would like to wait for another daily close below this pattern, below 33.74. But hey, these moves can happen within 1 or 2 days. We know our TTF. So in that case, I would honestly start looking into the hourly chart. I think that's way more useful. So here we are almost dealing with a rounded top, so you can see, right, so this is the full range on the daily chart, and we are better enabled to trade these smaller swings on the hourly chart. Because look at that, yeah, on the daily chart, we are just dealing with like 2 or 3 candles, where we are always wondering, oh my god, I hope the next candle is green. Oh no, this didn't look as green anymore, and the body is smaller. Are we turning bearish now? Oh, we gapped higher one more time, and maybe we can, maybe we can make it to the upper end completely, and no, we didn't. So I never want you to be in a situation where you have to start guessing the next candle. So if you ever find yourself in that situation, that's a sign that you are in a too high of a time frame and you might want to move lower. How to identify the right time frame is also described in the playbook. And here we are on page 42, step 2.a in building a methodology. Well, this is for physical traders. We have a whole other section for speculative traders. It's the same, right? Best practices for mean reversion strategies in a sideways market. So here the problem is that, once again, as I described, the moves are pretty tight. So what's recommended is that we start moving into the lower level time frame, because here we are actually waiting to see the flows, the market swings develop. And then of course, a very simple strategy. There's no secrets here, right? We are trying to buy within the ranges and sell at the peaks. And then of course, once we break past the range, then we are looking for buying opportunities, or we are looking for selling opportunities. Very simple. Here, once again, we're using candlesticks and oscillators for confirmation within the hourly chart. And here we see that we have a rounded top. And the rounded top is a super interesting pattern, because it is showing us that over a considerable amount of time, the market is carefully reconsidering the preceding direction, bullish, and it's taking all fundamental factors into consideration to come up with the solution that yes, the market is more likely to have topped out. So usually, if you look at the traditional textbooks, this is a chart pattern that we would only see on the daily chart, and can take weeks and months to form. But since all these very high quality reference guides were written in the 80s, we have seen a great increase in liquidity, also intraday, of course. So yes, we can take all the big patterns like triangles, rectangles, wedges, rounded tops, head and shoulders. Of course, we can also use them on the hourly and the lower level time frames, because the sentiment remains absolutely the same. And here in our guide, we once again explain that it's a reflection of the market carefully considering the reversal of the preceding trend. So in summary, for the TTF front month, for now, the daily chart is neutral within the 32 and 36 range. We might be seeing a rectangle forming here. Looking at the hourly chart, it looks like we have topped out for now. If you want to trade this range, then please go to the lower level time frames, hourly 15 minutes. Once we break past this range, I recommend probably starting to look more at trend and momentum tools, because we are probably going more with, we are then switching from a mean reversion strategy towards a trending strategy, towards a momentum strategy. And that's all for the TTF. Stay safe out there in the markets. See you around, and bye bye.